I'm just going to show you a very simple way of how I mark out the charts and how I come to an analysis to be able for me to then enter into some trades. And I'll show you the full breakdown from what I do for my trends, so the higher time frame, and then getting into the actual trade. So let's not mess around here. Okay, so basically I'm in backtesting mode here. I mean, we'll start from the 8th of June, which is a Thursday to start it off here. Very easy. Okay, so basically, let me get this magnifying tool. And right here, this is the 1 hour, and this is the daily open right here. And we're coming into London session now. I primarily just trade London sessions, so we're going to skip the New York sessions just to keep this video nice and quick. But it does obviously work in New York session as well because price is fractal. So what we have here, the most recent break of structure was to the downside. Okay, so if I was coming to the markets right here, and I would have in my top right, I would have 1 hour being bearish. Okay, so I would have that just like that, and maybe you see my reels and on the Instagram post and everything like that, but my 1 hour is bearish. So as I go down into lower time frames, so I go straight from the 1 hour and I go down into the 5 minute. So as you see here, if I just make this shorter, we'll just connect it right. Oh, that is just not what you want, is it? Okay, so you have that right there, and let me just zoom out so you see that right there. So just market structure, you can see from the higher time frames, breaking these lows, closing down below. So we're in bearish momentum, bearish price action, and 3 o'clock New York time, 3 o'clock AM New York time is when London session opens. So then basically what we do here is just go and do exactly the same thing. So as we're looking for bearishness, so we're looking to take price lower on the 1 hour, we also look for it on the 5 minute. So what we want to see is breaking of lows, market structure lows, so swing lows. So this would be a low right here. So we'll just mark this out. So we just mark out this low right there, and we wait for price to break it and hold, and obviously close with a body. So there we get a close with a body, and then in this range right here, we just want to see an imbalance. So we have an imbalance here, and what we want to do is basically, I don't mark it out like this, like, because you guys know exactly what imbalances are now anyway, through all the ICT concepts and stuff like this. The majority of you do anyway. So, but let me just confirm it right now. So basically an imbalance is where you see a gap in the market. Okay, so as we see right here, from this blue candle here, the bottom of this blue candle, to the top of this blue candle right here. So candle 1, this big one, number 2, number 3. So an imbalance is in between 3 candles. So let me just move this out of the way so you can see that gap in between the first candle and the third candle when price has broken structure. So price has broken structure, so it's a low, a swing low, and then price has broken it, and we look back into this range and we see there's an imbalance in between these 2 candles. So for me, what I like to do to get the best risk to reward, I like to also enter in off of the total fill of the imbalance. Okay, so what that would look like, if I just get my box out again, would look like something like this. Okay, so my entry would be to totally fill this whole imbalance. The reason being is because, as I just said, you get the best risk to rewards. So this then would look like this. This is how my trade would look like. So I would go for 1 to 2, but first of all, my 1 to 1 would be my risk management, would be when I would start putting my stops to break even, etc, etc. Okay, so let's just see if this comes back and taps us in. So we thought, okay, so as you see right there, it taps us in straight away. So now we're in the trade. Okay, so we have our 1 to 1 down here, and we just see what happens here. So there we go, there we go. Fast forward it a bit more, this should be quick here. Okay, still not even hit a 1 to 1. Okay, so that was a full loss. However, I also implement this risk management tool right here. So as you can see, we made a new swing high whilst we were in drawdown. So for that reason, let me just quickly move this down like this. So as you can see here, this swing high, after creating a swing, breaking a swing low, closing below a swing low, coming back up, retesting the high, doesn't break the high on this part here. So if we just move back into backtesting mode here, this candle right here failed to break that swing high that we had our protective stop over. Then you print the next candle and you can see. So this is a lower high right here. So this is the highest high out of these 3 candles, which create a swing high. So for that reason, this is when you would manage your risk. If I can just grab this stupid thing. I'll put a new one out. So let's say our trade was just looking something, let's just be just like that, because you know how the trade looked anyway. So now, instead of taking a full risk loss, I put my stop here. So I'm managing my risk right now. So as you can see, if this was a one-to-one, which I think one-to-one was like something like roughly there, let's just say. So now I've taken my risk from a full 1% at like 12 pips, let's just say, to like a 7 pip, 8 pip stop loss, right? So now I want this to continue going down. This is great. It's looking wonderful, right? You're like, okay, this is going to hit a one-to-one, then I can put my stops to break even. But no, you just watch and you react to what price is telling you to do. So, and then you see, okay, reverse, bang, taking you out, okay? So that was that trade right there. And then obviously that day, it was actually quite terrible. It carried on ranging quite badly, even into New York session. So that is just one example. So let me just continue doing another example for you here. So that's just one day gone. So we'll go to the next day. Okay, so we'll just fast forward. This is the 1 hour, remember? So you start on the 1 hour. And let's see here. So what time is that? That's 8, 9, 10, 11, 12. What is it opening? You have 3. That's midnight, 1, 2. Okay, so we'll be here. So basically, what do we see right here? So as you can see, bullish market structure, breaking these highs. And then, as I said before, what's your most recent break? Your most recent break, once again, is to the upside. So in this scenario, I would be looking for buys. So as I go down into the lower time frames, I remember 1 hour bullish, just like this. So 1 hour is bullish, so I know that in my top corner. So as I come into the 5 minute, I'm looking, okay, so now I'm looking for some sort of break of structure to the upside, once again, with an imbalance. So as you can see here, this candle right here has not closed above this high yet. So we are not taking that. As you can see, it rejected from the high because they were showing no willingness to continue going up. So we'll fast forward, fast forward, fast forward. Remember, I'm just in London session right here. So basically, let me just show you this thing here, right? So basically, that is a swing high right there, because as I said before, the middle candle is the highest point. This candle is the third. This is the first. The middle candle should be the highest point of all these 3 candles. As you re-break there, we can see if we get an imbalance. Okay, so now we get an imbalance right here. Okay, so we now have a full fill. Once again, a full fill of the imbalance. You stop below the swing low in this instance, and then you can target a 1-to-1 for your first one. So basically, this is exactly how your trade would look like. So it looks quite a small trade. However, this is not where you're taking profit. This is where you are you're going to be managing risk. You're going to break even here. The rest you will let run to continue that 1 hour bullish structure. Okay, so if you understand, that's why we look at the higher time frame bullish structure, because you want to see whether or not you're going to be bullish or bearish, and therefore you get your trade entry on the lower time frame to help you with this. So let me just fast forward a bit further, and as you see, we don't get an entry here. So that is then deleted. So that's within our time zone right here. Now, as you can see, we're out of this time zone, no trade, brilliant. So as you can see, it doesn't always work like this. So let's just see if we can go into the New York session and see if we can get something here. So let's see what's going on here. So on here right now, as we opened up into it, you'd still be bullish, because in order for us to be bearish, we'd like a swing low to be taken and closed below. So that right there, this low right here, was never closed below before the New York session. Therefore, we're continuing to look for buys. I'm not sure if I'm mistaken if this was the rangy day or not. However, we'll just go with the flow. So you see this right here. Once again, this is a high. It could have been this high. It could have been this high, because this was also a swing high. But nevertheless, both of them got broken, and this candle closed above them as well. So there you go, right? That came in, and did it give you any imbalance in here? No, it did not. So therefore, it continued to fall down. You didn't get an entry. Brilliant, 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 right? And then the rest of the day, you could have done this. I just skipped way too far forward for that, because in this instance right here, for us to be in order for us to be bearish, On the 1 hour, the 1 hour would have to close below this low if you remember it from the 1 hour chart, right? I know it wasn't that low, it was this low right here. So in order for us to be bearish, we'd need a 1 hour closure below this area here, which we never got, as you can see there, even though I fast forwarded it on. So you keep that in mind, and you always keep on checking back to the 1 hour time frame to see if it's going to be closing below this area. It doesn't matter if the 5 minute closes below this area, it has to be that 1 hour time frame, because that is your higher time frame market structure. It could be liquidity grabs, which is exactly what happened. This is a liquidity grab for price to push higher, and that's exactly what happened. So let me just take this out, and so we don't have so many lines in here. So right here, we're still looking for bullishness, and that was a swing high that got broken. Let me just replay this back here for you so I can talk to you as it's going on. So right here, this is a swing high that was made. Swing high, candle 1, candle 2, candle 3, candle 2 has to be the highest, right? Let's say we're talking here, candle 1, candle 2, candle 3. There is no swing high because candle 2, that was not the highest point. You see what I mean? So if we even go, let's go somewhere here. Candle 1, candle 2, candle 3. This is a swing high. This needs to be broken and closed above, right? So when price came back again, did it break and close above? No, it did not. That is a swing high. So that tells you if this swing high gets broken and closed above, and then there was an imbalance, which there wasn't, that's how you can set and format your trade. So right here we get a swing high, broken, closed above. Now this is the next step, which is what I've seen so far this week actually, is that there's two ways to do the imbalances. There's a way where you can do the imbalance straight away, right? So basically you don't need 3 candles, you only need 2. So you need this one, and basically what you're banking on is getting earlier entry. That's really all it is. So what you really thinking of is, if you're doing the imbalance to be filled straight away, where it doesn't really show you the imbalance, this would be what your trade would look like. Okay, so your targets are up here, but as you know, a 1-to-1 for your first kind of area where you'd look for price to go, which it would look something similar like this. Okay, and what you're looking for is for this price to be filled instantaneously. Okay, so sometimes this can work, and this will be very beneficial for you, because then you don't have to wait and you can get an early entry and you can catch the trend really quickly, which is what we're going to see here. However, if you do that, then you run into problems like this. So then you get taken out straight away. So it's a game of probabilities. You have to back test it yourself. This is obviously what worked on this session right here. As you see, this came back, filled the imbalance straight away to the pip. As you see, I drew that from this high here. It tapped it straight away. We're into this trade. And literally it went for a 1-to-1 straight away. So therefore you can put your stops to break even, and then you target your next swing point high. And as you see, just straight away going to your TP, you can let the rest run whatever. However, if we just make that go right like there. So let's just say we're just measuring the RR right here. So you've got a 2.3 RR, and the majority of it was risk-free. So you see how that can work. Now, if you're just starting out, I recommend that you don't do the fill of the imbalance straight away. You want to see just the 3 candle confirmation kind of thing. But there is there's no need to stick on that if you get really good at it. So let me do a couple more examples. And I know this is on GJ, but I took a trade today on gold, or yesterday, sorry, on gold, which actually worked out just doing this exact same thing. Now, I do recommend just sticking to 1-2 pairs so you can train yourself, and that actually allows you to stay very consistent. Sorry, that is the open right there. So let's see right here. Let's go through the way of thinking. So we're on the 1 hour. What is the most recent structure break? Even though we're ranging a lot. So even though we're ranging a lot and it's not the best market structure right here, let's just go with the flow. I would primarily, if I saw this, I would not touch GJ for this day or this London session specifically coming up, because I mean, look, it looks like it's ranging. However, let's just try and deal with what we've got. So if we have this as our low and we have this as our high, and that says it's broken it. However, remember, we like closures above these places. That if you keep on going back, it's like, okay, where was the last closure? Where was the what market structure were we in? Right here. We don't really know. So you have to keep on going back and seeing, oh, where's the most recent market structure break? And the most recent market structure break was actually here on this candle, which was yesterday in the New York session, which when we took that trade. So knowing that, this would be our most recent market structure break to the upside. Therefore, what are we doing? We are now looking for, once again, bullish market structure. So 1 hour is bullish. So we put this in our corner, even though that's slightly off so far. And then when we go down to the 5 minutes, sorry, we remember what we're doing. We're looking for bullish market structure. So now we're in here, and as you can see, I just couldn't stop it in time. But this was the break in market structure right here. Now we've left a gap right here. So this is the difference. Okay, so let me just get this out, even though it might not be the best visible tool. If you were looking at that for a 2 candle confirmation kind of fair value gap, you would have, okay, you would be, okay, let's just get the full feel of this imbalance right here. So that's where I want my entry to be, on the top of this candle. My stop will be below this candle for the swing point low. And let's see if I get tagged instantaneously. Let's see if this gap gets filled instantly. And does it? No. Therefore, we have now anyway still got this gap here. So you know what I mean? So this is why I tend to go with the 2, because it's like if you miss this one, then price can always come back to your limit order or whatever you set if you want to watch price when it comes to the area, to then be able to get in it once again. So it's kind of like you get, like, in a way, 2 trades in one. So you get one type of trade, which is the complete imbalance fill, but that's kind of without a confirmation, but you can get this early trading. So imagine this came down, tapped us in. This is already gone for a 1 to 4, okay? But then you can wait for that confirmation of when this is an imbalance. So then the confirmation would be for price to continue to come back down to fill this gap in. So let's just put this here anyway, because I like the whole feel of the imbalance, as you know. So let's just leave this here, because that's exactly what we're doing. 1 hour bullish. We got a 5-minute bullish market structure break with a candle closure above it. I mean, you can't quite see it, but trust me, it is. And then, yeah, and then basically we can wait for this to come back and retest and see if we can get in or not. So price is coming back quite strong. Let's see what happens here. Oh, okay, so it taps in, and then, like I say, we go for 1 to 1 first. 1 to 1 first, so then we can put our stops to break even and we can be risk free, and that's the way I like to do it. So that literally came in, tapped in, rejected away, stops to break even at this point. And then you can go and target the high, you can target the resistance, it doesn't really matter. I tend to then put my next point at the resistance and then the high, just because, I mean, I don't know, I just like to have TPs at logical areas. So let's fast forward, 1 5-minute candle, there's the next, out. So you get what I mean. So let me just then measure the risk to reward on this trade. So our stop was below here, our entry was there, and our TP was there. A 1 to 3.74. Okay, so basically when you saw so basically in these 3 examples right here, we had 1 winner for 3.7. I mean, let's just round it down. Let's just be normal. So we had 1 win for, what was it? Plus, that's equal split. 3.7 R. And then we had another one, which was here, which let's just measure it out here. If you remember, we've got the instant fill with the stop below here, and then let's just even use the resistance right here, 1.75. So then we go back into here, and then down 1.75. And as you can see, we're already near on 5% here. And then we had that loss. But then, the loss, was it a full loss? No, it wasn't even a full loss. Let's measure how much this loss was. So it was right in here, if you guys remember, instant fill, right there. This TP was a 1 to 1 first, which it didn't even hit, so we couldn't even go break even. Therefore, that's why we lost. So that was 7 pip loss. So if you drag the TP part and you put it to 7 pips, so I lost 0.64. So let's go back into here, and then basically, so the last 3 trades, and that's what you end up with. Last 3 trades, great risk to reward, good management in the trade, and it just allows you to follow the trend as long as you're following a higher time frame kind of trend. So this does, like I said, work on gold. It works on, it works on anything. It's just price action. So as long as you go along with this and you master your risk management in these type of scenarios, because these type of scenarios are hard. Because you're just like, oh my God, it rejected the high. It's come down to 1-to-1. You're just like, oh, this has to then go and break the lows. Awesome. I'm with the bearish market structure, blah, 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 blah. That's the hard bit. And if you conquer the hard bit of trading, everything else comes easy. Everything comes easy, and then you can just let things run. And yeah, I mean, we do a daily analysis in the Telegram anyway, so if you want to join that, it's free. I'll put the link in the description. Likewise, the link is also all over our social media. So you get two different analysis from two different traders. So basically, you're getting two traders in one group, which is all for free.